I want to get your take. Nvidia crossing the $5 trillion mark, partly on some bullish comments from the president. Also, they had their GTC conference yesterday. What does that say to you about the AI trade?
Good morning, Frank. It says it's certainly alive and well, and there aren't a lot of concerns from investors. I mean, AI has been a tailwind, and it's continuing to power the market, and Nvidia is certainly right at the center of that as they've continued to make deals with a number of different companies to just continue powering it forward. And we do think this will continue to be transformational, and it's certainly a place where you want to make sure you have exposure.
All right, so again, this Nvidia news, part of the reason why we saw all the indices hit all-time highs. But there's one stat that was out there that kind of raised my eyebrow. It's from Bespoke. Yesterday was the narrowest breadth we've seen on a positive day for the S&P since 1990, maybe ever. Their data goes back to 1990. What does that say to you? Are you concerned about concentration in the market, the fact that so few stocks move the indices higher?
It's certainly something to keep an eye on, and it's something we haven't seen before to have this level of concentration. But we have this concentration in companies that have incredible balance sheets, incredible cash flows, have this capital expenditures that are being made that are driving economic growth, and really, they have expansive businesses. So while there is concern around the concentration, we don't have necessarily the concern that this is something that looks necessarily like we saw back in the dot-com bubble, because these companies are incredible, and they really are making changes broadly to what we're going to see the world will look like going forward.
So, by the way, for anybody watching Nvidia, it has to hit 205.76 at that level at the open to officially hit that $5 trillion market cap. Right now, of course, we're in the pre-market. I want to go back to the earnings after the bell today. We got 3 of the Mag 7 reporting their earnings. Does this increase just the narrowness that we saw yesterday? Does this increase the importance of these earnings? They already have a relatively high bar. They're well owned. Do you see a setup here where, with earnings expectations for the Mag 7 at about 14%, it's an easy level to hurdle, or could they stumble if it's not just the right report and just the right level of CapEx spending?
There will be an incredible amount of focus on these earnings. I mean, just the 5 that we're getting between today and tomorrow make up a quarter of the S&P's market cap. So this really does drive the market and kind of investor sentiment broadly. So we need to see that they come out, that they hit those levels, which we view as perfectly achievable, and that the narrative sounds good, that they're continuing to make the CapEx investments, that we're starting to see some benefits from the AI investments they're making, and that we're seeing just broadly that the businesses are continuing to perform well. And we do expect that we'll continue to hear strength from these companies.
Are you worried that the market is pretty much priced to perfection and investors are a bit on edge? Despite yesterday's action where we saw everybody pile into those AI stocks, I'm just looking at B of A's client flows. They say for 2 weeks, tech saw the biggest outflows and Staples saw the biggest inflows. That's a defensive trade. Any concern here that, again, if it's not just the right numbers, especially when it comes to CapEx and, of course, growth for cloud for these mega cap tech names, that there's going to be real issues here for the markets and we could see a big pullback?
We wouldn't expect a big pullback, but we could see volatility. We wouldn't be surprised to see that. Okay. And that's why you want to maintain that diversification in your portfolio. I mean, we saw it a couple of weeks ago when we saw the escalation in the tensions with China, that there was a huge rotation in those couple of days where Staples suddenly were the best performing sector. So you want to make sure that you're diversified and you have other exposures, and taking profits in these names that in some cases are up between 50 and 100% in the last 6 months is not a bad thing to do. So just maintaining that diversified stance, because we could see some volatility going forward.
All right. Any concerns about the labor market? We're going to talk much more about this coming up. But we saw some big layoffs yesterday from Amazon, from UPS, in recent days from Target, some other smaller layoffs from other companies. Should that be a worrying sign for a market that's really powered by the consumer?
We're still seeing that the labor market overall seems to be pretty stable. Of course, we're not getting the data that we are used to getting given the shutdown. But what we saw coming out from the ADP payrolls seemed stable, seemed solid. So right now, it's not a large concern. But if we start to hear about more widespread, larger amounts of layoffs, then certainly that is something we definitely want to watch. And I think that's why the Fed is moving into this back into cutting rates and moving into a more dovish stance.